Good morning, everybody. Welcome. We are going live with Mike White in 5, 4, 3, 2.
Good morning, everybody, or evening or afternoon, depending upon where you are on the planet. Welcome to the high probability short term trading show here on the Hub channel. I like to call these trades snipers. And today, as we always do, we'll take a look at the markets. A key report came out this morning, two of them actually. We'll take a look at last week's trades. I have a really good trade today I want to talk about on an airline stock. We have a guide we're going to give away as well. That guide is free. So stay tuned, buckle your seatbelts. We have a little bit of a fast-paced game here. We're going to trade actually live here in about 14 minutes on this airline stock. So let's hop right in and talk about this thing called the CPI. It's an inflationary report. It stands for Consumer Price Index. That index came in today a little bit lower. So inflation is starting to drop in front of the Senate. Earlier this week, Powell spoke to the Senate and said, if we hold rates too high, too long, it's going to be really bad for the economy. We might spin into recession. So now the fervor is returning. Interest rate cuts, the timing of them is starting to be shorter than later. Most now are talking about a September interest rate cut. And prior to that, it was December. So some good news on the timing of rate cuts. The market wants rate cuts. As rates are cut, that's good for companies. The cost of money borrowing drops, earnings increase. So rate cuts are really good for the market. So all of that's good news for the economy. And here's what the SPYs did yesterday. The S&P 500 can be tracked with this ETF called the SPYs. It's actually a stock that tracks the S&P 500, and you don't need anybody on a YouTube show to tell you the markets are in a bullish posture. But technically, it's interesting because the S&P 500 yesterday set another all-time high. After wrestling with this 550 level, we breached it about a week ago, and then yesterday we cracked this 560 level. These lines in the sand, I call them. It's a colloquial way to say support and resistance. But here yesterday, this resistance level at 560 was breached, and the volume was slightly higher than the day before. So it looks like the markets are heading up. It's a bullish market across the SPYs. We could look at the NASDAQ. The QQQs is an ETF that tracks the NASDAQ 100. And look, similar sort of story here. The NASDAQ is also at an all-time high and cracked this 500 level, at least on the Qs. So bullish, bullish, bullish. Even the Dow Jones Industrial Average, which has been sort of like going nowhere, pretty much nowhere slowly, drifting up. And even yesterday, and this to me is market breadth, and I like to see all the indices moving up with some enthusiasm. And indeed, yesterday, the Dow Jones had a really big up day, and check out this volume here. Volume is, the way I think of volume is institutional conviction. Institutions control 75 to 80% of the market, give or take. And where they choose to take the markets, that's where they go. And volume is like, for me, it's like an elephant jumping into a bathtub. They can't but make a splash if they're really enthusiastic. And that splash there, this high volume on a crack above 395, is a good sign for bullishness in the Dow Jones. We've got 400 as major resistance here. The IWM, which is the small caps, they're also rising as well, now above the 50-day average, a little bit of extra volume tomorrow. So across the board, money is flowing into the stock market, and that's good. We don't necessarily need the markets in this particular strategy, sniper strategy. We don't need the market to be going in a certain direction, but oftentimes it helps us perhaps pick one trade over another. So there we go, bullish markets. Now we had a couple of trades come off. Now last Thursday was 4th of July. What was it called? 4th of July. So we didn't have any show last week, but since the last time we've seen each other, we've had a couple of trades come off. Amazon was a trade we placed right here on 6/27. And on the 5th, on Friday of last week, the day after 4th of July, this trade came off. And again, what we did, if you weren't on the show here, is we sold a trade that would make money anywhere above 187.50. So we sold a credit spread. What's a credit spread? There's a guide I'll tell you about in a minute. So one complexity of this system is that you have to employ what in the options world we call a credit spread. And I'll demonstrate a live one here in just a few minutes. So we sold a 187.50, 185 put spread. We sold it for 35 cents. This was filled live in a simulated Thinkorswim environment. We did it twice. So we pulled in $70 of credit with $430 of risk, and our rules are discrete. We bought this trade back for 4 cents on the 5th of July, and we netted about 14% in just over a week. So this is the style. We want to get in and get out. Like a sniper sniping from a relatively safe distance, we sell these trades, we pull them off sooner than later with exit rules that you'll see here in just a few minutes when I get to the live trade for today. So that was a winner. Another that we placed on 6/20. This was about a 2-week trade, and this one was on semiconductor stock ARM. They had some really good news. The stock breached resistance. It danced around a little bit, and we ended up taking this trade off for a nice little gain on the 2nd of July. All right, so that's our most recent trades that have come off. We did try to place a trade on Walgreens Boots Alliance as well. The last show we had, that one did not fill, so we ended up with just the Amazon trade. Here's how we're doing now. So this is our 2024 performance. And, it's uncanny almost that this system, which is very rote, it's very systematic. The rules are discrete. And what happens year after, I've been doing this for 2 years in live shows, and we always end up around 10% every 7 days. In this case, we got a 5-day hold time and about 90% winning trades. And here, so we're almost at 90%. We're at 10%. Our hold time is only 5 days so far this year. So you're thinking 10%? 10%? That's not a lot of money. Well, if you imagine this, you could take as low as $50, right, for one trade. Let's just say you took $329, and then you made 10% on it in 5 days. Couldn't you take that same money and do it again? Make another 10% with the same money? That'd be over 10 days. You could do this trade 4 times at least in a month, and you could make 10% 4 times. All right? So these small, high probability wins stack up because we're not in these trades very long. Make your 10% week 1, make your 10% week 2, make your 10% week 3, make your 10% week 4 using the same money. So don't throw your nose up at 10%. If you're making it with this kind of frequency, it's it's a really cool deal. All right, now we do have a guidebook that we'll show you a graphic here on. The guidebook will walk you through the 5-step process that I do here live every Thursday morning at 9:15, and it walks you through all the 5 steps. How do you find the candidates? How do you drive these lines in the sand? How do you manage the credit spreads, et cetera, et cetera? It's free. My goal here, I have a community called Michael Wade Trade Coaching, and what we're all about here is providing information systems, trading systems, and community that can give people, retail traders like you and me, the opportunity to have a really high probability way to generate some meaningful income. So that's this. That's what this is. Now, we do have a new trade for today, and it's on Delta Airlines. It's one of my favorite airlines. Not that that means anything, but Delta Airlines came out with earnings that disappointed. So they just announced earnings. They said, oh, well, our earnings per share is a little lower than we forecasted, and we're going to cut our future guidance. All right, so I call that the bifecta. It's the perfect storm. A company that didn't do well last quarter in their earnings per share, and they're forecasting next quarter not as good either. And so when you get that kind of news, then you can really just hop on the bandwagon and snipe a high probability profit. Now, I'm in this Hub software here. If you're interested, go check out hub.com. You'll really like this software. It's a really nice little piece of software. All right. So here's what Delta looked like yesterday. All right, what time do we have? It's 7:28. Let me show you a live Thinkorswim chart here on Delta Airlines. Actually, I don't need the chart. I just want to see the current price. Delta's trading at 43 pre-market. All right, so what does that mean? Well, I want to see where the stock is going to open. In 1 minute, Delta will open right above this blue line here. So Delta was there yesterday. Today it's going to open up right about here where my pointer is. And what's interesting about that, and actually we can be opportunistic with it, is that when if the stock were to drop a little bit, it's going to find support potentially right at this blue line and could very well bounce. All right, so just know that when we snipe these trades, if there's a major resistance or support level, that in this case a support level, that could stop the stock from dropping further and perhaps even produce a bounce. There's the stock. So it just opened. Let's just watch this for a second. Here's my prognosis. Here's what I think is going to happen. I think Delta is going to bounce off this blue line and rise over the next few minutes. How far will it rise? I don't know. I don't know. I'll have to wait and see. But I don't think Delta is going to drop any lower. And so what's important on these is if the stock, this is a really, really good example of when you want to watch this. If the stock is bouncing, so far it is, bouncing off the 200-day average, it could actually rise a bit over the next hour or so, maybe the next 5 minutes. It could rise by the end of the day, and we got to be careful not to get too close. So what I call lines in the sand is all about, well, how far away would I like to look? There's Delta rising, as I suspected. How far away can I get and keep myself safe, like a sniper trying to shoot people from behind a wall or a window or a tree? What's our window and tree? And I think 47.50 is as close as I would like to get, but maybe we can get up here maybe around, I don't know, 48. So let's say, because I'm a bit concerned about perhaps the stock's going to make a strong run. I don't think it'll get back up above 47.50 because that's where it was yesterday, just below that. And why would the stock with the bad news recover and go bullish after the news announcement? It's not likely. So I think 47.50 would be an interesting place to sell, but maybe we can get something a little higher up here around 48. So just a little bit higher. So again, the idea of these lines in the sand is I'm just trying to find a place where I don't think the stock's going to make it to over the next 2 weeks. And then that's where I'll put a trade that will profit if Delta goes sideways, if Delta drops, or even if Delta rises, but no higher than my line in the sand. That's the way to think of it. I want to put on a trade that makes money anywhere below this line. Delta can do a lot of stuff. And Delta shouldn't rise because it's got the anchor of bad earnings and a bad future earnings guidance around their neck. So let's go see what's there. I don't know what's there. So we're going to hop into a live environment. This is a simulated trading environment in Thinkorswim. So I'm going to click trade here. And I've got my option chain specified for vertical. This is not a Thinkorswim lesson. I just want to get the trade that I think might be a good one for us. Let's try with 15-day options. And I'm just going to see what's available at 48. All right, so this is going to be the July 26th is my line in the sand at 48. How much credit can I get? Let's see. I just got to find out. So I see here that if I sold the July 26, 48, 49 credit spread, again, our line in the sand I'm looking for is 48. This trade will profit anywhere below 48, and I don't see any premium. All right. The minimum I would take on this, y'all, is 10 cents. All right. So one simple way to fish, which is what I think we might end up doing here, is to say, all right, my minimum credit that I'll take is 10 cents in this case. 10% of the spread width is 10 cents. It is not worth 10 cents right now. It's not worth anything, in fact, at the moment. So I could still, though, place this order and see if Delta actually does bounce. Okay, so there's 10 cents right there. I see 10 cents credit. Let's give it a shot. And I'm going to do 5 of these actually. I'll talk about position sizing here in a minute. 10 cents flash. Let's just try. Why not? Let's just put that order in. And let's just see if we might catch a fish. Not likely. Not likely. We'll take another look at the Delta chart, see what Delta's doing since I've been speaking here. What's Delta doing? Delta is trying to drop below this 200-day average, but not yet. The 200 is holding. Delta's made a run. Traders are trying to figure out where they want to take this stock. So far, the 200 is holding. Again, I do think there might be a bounce. Likely there's a bounce, I think, coming up on this one. All right, so that means I've got to lower my line in the sand. So let's try for 47.50. I'll go as low as, let's say, the bottom of these bars here, which would be 46. 46 would be as low as I would go. In fact, I'll say 46.50. All right, so 46.50, this line in the sand, is below this bar there, and support yesterday. So 46.50 is as low as I'll go, but let's just slide it down a little bit at a time. So I'm going to go from 48 to 47. It's going to change the strikes. I want a 1-point spread. There we go. At 47, there's 12 cents. So now I'm going to try to lift it up a little bit, take a little bit less, get a little bit more probability of profit. This game is not about making money. The outcome of this game is making money, but the game is all about winning, getting your 10%. So don't get greedy. Be conservative. Keep your lines in the sand at a relatively safe distance. Here's the one. We're going to be doing this one. I'll type this up here in a spreadsheet in a minute. We're going to sell the Delta Airlines 47 call, and we're going to buy the 48 call. And we're going to ask for 10 cents. Let's go ahead and confirm and send that one. Let me show you what this looks like on this chart. Back to the Hub software, 47. There, I just got it. So we just sold a credit spread where we make money on this trade as long as the stock stays below 47. All right? That's right around 47. So as long as this stock stays below 47 over the next 2 weeks, we're going to make about 10%. I got to check to see if we got filled. We did. Well, I got 15 cents. That happens sometimes. We actually got 15 cents on this particular trade. Let me go ahead and show you the trade in a spreadsheet. So we got the Delta Airlines, July 26. We sold the July 26, 47 calls. We bought the 48 calls. And we actually got 15 cents for that sucker. And that is a beautiful trade. Let me show you some other math here. Before I do that, once you're in this trade, again, we'll make money anywhere below 47 by expiration on July 26, 2 weeks away. All right. Now, the stop loss rule is the most important, and it is very simple. It's right in that free guidebook. You can go down below here and click the link and download the guidebook. If the stock were to close above our short strike, our short call, 47, then you close the trade for a managed loss. Number one, we lose 1 out of 10 on these. This might be one of them. Who knows? But if the stock crosses this short call in this case above 47, stock closes above 47, shut the trade down and take your loss, take your hit. On the profit side, which happens about 90% of the time, we'll place a GTC order to buy the spread back for 10% of what we sold it for. So in that case, I would round this up to 2 cents. If you got filled at 15, round it up to 2 cents, buy the spread back, GTC for 2 cents, and then you'll net 13 cents on the profit, which would be a really nice return on investment. So risk management is the name of the trading game. And if you want consistency in your trading, you must manage your risk first and let the profits take care of themselves. It's really important. So in my community at MWTC, MichaelWadeTradeCoaching.com, MichaelWadeTradeCoach.com, this is what we do. Risk management, community support. So here's some math right out of the guidebook. And so what we just did, let me refresh your memory. What we just did is we sold a credit spread that's $1 wide. All right, so the width of this spread is $1. And then when I go to my calculations, I want to figure out what my maximum return on investment is, right? So the spread width is 1. We just got 15 cents in a live account. My maximum risk is the first thing to calculate, right? So the max risk of these credit spreads is the width of the credit spread minus the credit received. So $1 minus 15 cents is 85 cents of risk. Okay, so we know then if I can make 15 cents on 85 cents of risk, if I divide 15 by 85, this trade can give us as much as an 18% profit in a couple of weeks. All right, simple calculations. And the guidebook, again, walks you through that. Now, you might want to make $15 on $18 or $85, but maybe you want to risk a bit more money. And so the next thing to consider is position sizing. And for me, and the way I coach people is don't risk any more than 2 to 3% of your portfolio, and certainly no more than 5%. So I'm just going to say my account size is 25,000, and I want to risk only 2% of that. 2% of 25,000 is $500. That is my max position size. That's the most money that I'll put at risk in any given trade. So now that I know what my position size is, I can figure out how many contracts I can get to risk not $85, but something close to $85. And this little math here calculates it. If I did 5 contracts at 85 cents of risk a contract, my max risk would be $425. All right, so you just do that math. Divide your max risk into your position limit, and that'll give you the number of contracts. And that's precisely why I did 5 contracts on the Delta trade. All right, so there's Delta Airlines. I like it. Now I'm curious, what's the stock doing? Let's see if Delta's making a run. Yeah, it's bouncing a little bit. But again, our short strike is right where my red line is. It could recover, but man, is it going to get back to where it was last night after the bad news? It might, but not super likely. All right, Amin, that's our trade for today. I have a few more minutes. Do we have any? I didn't mention this in the beginning, but if you have any stocks you want us to look at, please do pop them in the chat box on the YouTube channel there, and Amin will bring them to the table. What do we got, Amin?
It doesn't seem we have any question yet, Mike, but two people are telling you that they are only seeing 3 cents on Thinkorswim for, I think, Tasty.
Okay. Yeah, I got filled in a simulated environment. Here's what you want to do on those. Just give it some time, because Delta, as I mentioned, looks like it's going to bounce. So just stay patient. If you didn't get filled, Delta looks poised for further upside. I think maybe it gets to 45. But as Delta starts rising, the credit for that 47, 48 short call spread will increase. So just be patient, keep your line in the water, take no less than 10 cents. So you'd set an order in to sell that credit spread for 10 cents. And look, Delta's already rising as I'm speaking. So if that does continue, you have a good chance at a fill. And lastly, if Delta stops rising, you could also consider dropping it down to 46.50. But I wouldn't right now, because look here, man, Delta's really starting to take a little bit of a run back up. All right, so be patient. I'd leave it at 47. See if you can nab 10 cents during the morning here. All right, I think that's a wrap. Actually, I got one more I've got my eye on. I'm not going to do a trade on this. Whoa. You ever heard of WD-40? It's the metal lubricant company. They came out with really good earnings, gapped up, and now have retraced. I did like it in the morning, but after the fervor, WD-40, WDFC has come back down. The news was good, so I think this could be an opportunity. I know I have a handful of people on this call from my snipers community, and I would look at maybe 210. Although the stock's come down a bit, heck, let's check the news. I'm going to show you what happened here. I'm in finance.yahoo.com. WDFC is the symbol. Yeah, so their sales topped estimates, declares regular dividend, schedules third term, blah, 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 blah. So they had a pretty good earnings announcement and maintains their full year outlook. Third year quarter results rise. So it's a good announcement. And yet, yeah, Q2 sales top estimates, that's the big news on WD-40. And the stock has come down a little bit after that great reaction. And so my stance is the news was good. So you could consider coming in and selling maybe at 210 or even lower. That would be sell the 210 put and buy the underlying put. All right, everybody, that's a wrap for today. Please get the guidebook. You can come join me every Thursday at 9:15 here on the Hub channel. We do live trading every week. Sometimes we do 2 trades. We always do at least 1. The other thing to note is that we are in earnings season. It's just starting to heat up and will continue heating up all the way through the end of August. So there'll be plenty of sniper candidates. Get the guidebook, trade with me every week, and have a great time learning this very, very high probability system. Thanks for showing up, everybody. Really appreciate you. Have a great week, and we'll see you next week.
All right, Mike, we're out.